All right, it is Sunday, the weekend of February 4th, and welcome to the Trader Hub Weekly Market Review. Let's go ahead and look at the price action for the indexes this week. A wild week, as we predicted following the Fed meeting. Starting with the NQ, on Monday, we had a big rally up to the previous failure up here at 17,720-ish. We did reject that. Going into Tuesday, we had a big dump, and we had this level marked as the failure that took us up to the high. We ended up losing that going into Tuesday and then rejecting again on Wednesday during the Fed meeting. So that means that this became the level to gain. If we were going to retest the highs, this is the level that had to regain. Now we did actually come back down to this other level that was a brief consolidation on the big leg that took us way up here to this range. The reason that we have that marked out is if we look at the 1 hour, that is actually the failure that took us up on that consolidation of that leg. So that's why we have that marked there. And we can see that that actually did end up being the low. We did regain from there, and actually on Thursday regaining above the level to gain. You actually got a test. The only test that you really got to get in here was actually during pre-market on Friday. So this was a tough one to catch, but if you caught that, you got the retest of the high here again. It does look like it is currently rejecting. That doesn't mean that we can't try again. What we want to see is if we want to see continuation higher, we want to see this range, the top of this range, come be retested and hold to blast us through. We could also come back down here, lose this, and still potentially regain if we hold the lows, but more likely if we lose this level, we may see another attempt at the testing of this level to gain, or what is now the level to hold. So that's kind of what we're looking at going forward here. You know, we still are, again, moving back to highs here on the NASDAQ. So until we lose this level again down here at this level to hold, 17,480-ish, there's no reason to be bearish at the moment. We're just going to have to see what happens at this price range around 17,630, 17,650-ish. What do you think, Price? Anything I missed?
Nope, I think pretty good. We're going to play between those two levels. If we lose the top, that's what's going to happen.
Yeah, cool. Let's go ahead and look at the S&P. Quite a bit of a different look. You know, we had kind of the same price action, except that we actually gained and moved two new highs on the ES here. So there's really not too much to talk about. There is sort of this range up here, you know, that we want to, you know, if you want to see continuation, we want to see the high of that range hold. However, we could still see an uptrend if we come all the way back down to this is now the level to hold. Because it was the level to gain, we moved above. We just don't want to see this lost, and we can still continue to move higher. If we do end up losing this level at 4,924, then we could see about the possibility of making a new low lower than these lows at 4,870. So that would start to look a bit more like a bearish reversal if we got all the way down there. But we'll have to see kind of what happens this week. Anything you think I missed on this chart?
I really like this spot here. If now we're pretty far away from it since we're all the way up here, but if we did see a failure, I really like it coming back down here where it's untested, this level that produced the low and then broke to produce the high. That's a really good spot there, and it would be the next untested spot below here if we lose this leg.
Yeah, I mean, that makes sense. That's the big candle that took us down to that low. So I see what you're saying there. Cool. What do you think is going on with the RTY? How has the price action changed over the last week?
Well, actually, we had this in here, and we kind of expected it to come down and then come back up and test. And that's just about what we've seen happen here. The start of the week was at the top of the range, and they've come down and kind of swept the lows. We could see it come back up and regain this range, but at this point, I think we're looking for lower. We're looking, so if we did come up, there's a good chance it would reject, and we'd see lower. You can kind of see that on the daily here a little bit better. But yeah, what do you think about the RTY?
I think we're kind of at a point where if 2000 isn't regained, we're definitely going to see lower. I like our arrow. That's based on a fib pull from failure to failure on the macro time frame up here from really, really big fib pull from the COVID low to kind of the swing high, the failure there that took us down to the mid-range of this big box. So that's kind of why it makes sense that this consolidation took place kind of in that range. But that's the midline. We have made a new high. I could see if we failed, we come back down there for a hold and then blast higher. It is still possible that we regain this level and just keep testing the highs up here, but we'll have to see. In the short term, we still have technically lost this level. That means that we need to be more mindful of looking for downward pressure than upward pressure, though. Until we regain that level,
Right.
It does look like lower to me.
Right, and every gain would be daily closes up above about 2000.
Exactly. It would have to be daily at this point. So,
Mhm.
cool. What are your
All right.
thoughts on gold? Gold's had some pretty interesting price action recently, for sure.
Yeah, it definitely has. So it came. Let's see, we're right about here. The start of the week, it was right on this level, this weekly level, and it failed there and came down to this low. But it, really, it's just a higher low look to me on the higher time frame. You can see how it still just looks like it's consolidating in this upper range so that it can take off. And we got a retest down at that level. And then on, let's see, that's Monday. We actually, Monday afternoon, we have this big gap up and we've regained this range. So if we hold this range, we expect higher. If we don't, we can see a rejection of the same range down lower. But the higher time frames really do kind of confirm this upward look. Nothing has changed. So I think we both agree that we expect 2100 fairly soon here.
Yeah, there's really no reason to be bearish on gold. I mean, you could say that on some of the, until recently anyway, the lower time frames looked like maybe we were losing things. But this price action right here is great. If we want to consider this weekly level that we've marked out here, the level to gain, which I think that is the level to gain. Look at the daily, right? We're holding above and closing above it, even with all this wicking down. That looks good. Even if we do fail, we could come down somewhere in here and it would still be like a nice higher low look. Consolidation to the upside is, you can't call that bearish. We continue to grind higher over time. Maybe it's taking a while, but we're grinding higher. I still think that we're going to see new highs before we see some pretty significant drawdowns on gold. It could happen. I just don't see that. There's no reason in the price action to be bearish in any way, in my opinion. So I think this is going to go up for sure.
I definitely think, and it looks more likely that'll make it to 2100 than below 2000. What do you think?
Yeah, I think so. I mean, you got your two tests there on 2007. It held both times, then it gapped up. Now, granted, that is a contract change gap, but that doesn't matter. If you go back and look at the chart across history on, any futures contracts, that tends not to affect the technicals in any way. In fact, if you adjust for the contract swaps, your TA will become less accurate over time. So, this is certainly relevant price action. You could say maybe that you don't like it because it was a contract switch. I think it's totally relevant. This to me is a gain, and we'll probably end up seeing higher. Now, just to quickly talk about that, having a gain doesn't mean that we can't see lower before higher. That just means now we've gained the range, and if it wants to, it can come back and find support lower before going higher. That's just, another check mark in the book, right, in terms of what we think about where the price is headed, right? So now that it's gained, we do think we're going to see new highs, like you said, 2120, etc., something like that. So just wanted to talk about what that means for a moment. Do you have anything to add before we move on to the Dow?
Well, the contract change makes sense because, guys with really big positions need to be able to fill them and keep them in profit. And so how do they do that? They kind of do this to the chart for a little bit so that they can snag some liquidity, get some quick profit, and then refill lower. So yeah. It really does look, we've got this range here that's been holding, and that looks really good for up.
Absolutely. And just one last thing while we're kind of harping on the contract swing change thing. This right here, this gap, that's a contract change. That was down at 1840 to like 1860. That's a 20-point gap. That's roughly what this gap is. We're not going back down there. If we see that again, we got a lot of other problems to talk about, right? So, that's relevant price action. Even after the change, it's still respecting all the TO we drew from the past. So, I think the contract change gap can be mostly ignored and even used as valid price action. Enough about that. Let's go ahead and move on to the Dow. Again, not too much to talk about here. Let's move to the 4 hours so we can actually see what's going on. Continuing to make higher highs and higher lows. This has essentially become the level to hold at this point. If we do lose that, we can start talking about moving back to some of these lower levels, but on the whole, this is, again, and has been one of the cleaner uptrend charts of all the major indexes. Like, we continue to make, higher highs, higher lows, and even when we have, those periods of uncertainty, it's literally just sideways price action. So within a designated range. Yeah, I mean, there isn't really too much to talk about. This is pretty obvious. If we can hold 38,500, then we can continue to move higher. If we move lower than that, we can retest maybe 38,000 even. There's no reason to be bearish on this chart. What do you think?
No, I think it's going up. I really like this spot for a hold. Come down, and that'd be a very bullish hold for higher.
Certainly.
But just like you said, 38,500 is definitely the level you want to see it hold. You don't want to see any closes below here for higher.
Right now. Just to, actually, let's pop that level in real quick because I do want to talk about that. So this is a great example of, if that was the level to, that took us down to produce this low, we regain it, and then we're actually able to make a higher low after that. So you see with these level to holds and levels to gain, it doesn't necessarily matter if we just lose the level right away. We can always come back, retest, regain it. As long as we are able to regain those levels, we haven't lost anything until we make like a low lower than the low that brought us up, which is the area that we came back to test. So that's kind of what we're looking at when we're talking about these levels to gain, levels to hold. Doesn't mean price action can't be volatile. It will be volatile, but we want to see these certain areas hold or be regained when they're lost to continue these uptrends. Let's go ahead and talk about oil. What do you think about oil? It's had a pretty rough week this week, but it's still kind of within the range.
Yeah, absolutely. It's definitely doing some normal oil things. Let's see. This was Monday here. This big red open at the high, and then it kind of closed down. So Monday was a good short day. It spent all day making that look there where it closed below the level here that took us up. And so when we came back, it was a short signal for lower, but I think right here, right now, is where they're building longs and consolidating for the next leg up. You can see how it's come all the way down to the origin here of the 1 hour swing. So it's gonna probably, get some stops, consolidate and go sideways for a little bit, maybe a couple of days, and then you should start seeing some upward movement. What do you think? Yeah,
I do like that level as well. That was kind of the major consolidation here that broke to push us down, so it's a logical place for it to do that. I don't like it if it loses 70, 50, then we're starting to kind of lose a lot of the areas that we've held support at. What I think could also happen, though, is we could see like a gap down and then just getting bought up, or like a wick down and then getting bought up. That would still, in my opinion, that might even be more bullish than just holding here.
Yeah,
because that
absolutely.
would look like a liquidity hunt to slurp liquidity for higher.
Mhm.
But kind of like we talked about previously, now that we've gained this level, we can look for longs to try to regain it and move back up to this $80 level, which is kind of where the major failure that caused this whole leg down during this consolidation to occur. I think that the major thing to be focused on with oil is if we can hold 70, 50, or 70 even, you might call it, we're still looking for longs. And then we can confirm, like, really looking towards coming back to the highs up here if we can break above 80. So that's the only thing I'm looking at this point. This trade idea I think is well placed. I don't think anything about it has changed. Certainly not closing it early because of any of this. This is just what happens, right? Spending a lot of time consolidating here and slurping up liquidity. So yeah, we'll have to see what happens on oil. Wouldn't be surprised if, like you were saying, we move sideways for a bit though. So what do you think about the dollar?
I think it had a great close on the daily here. That's a very bullish look. In the very local time frame, we could see something like this where it comes down, tests, and then continues higher. We'd want to see another close up above here, but you can see how on the 4 hour that does look like a decent look, that could play out that way. And that doesn't mean we couldn't see it even come down lower, but the higher it stays, the more fuel it has to continue up. What do you think about Dixie? Do you like that close? Or
I do like that
else?
close. I think it needed it because, we've been consolidating in this tight range for 2 weeks now, essentially. And every time it looked like it wanted to go, it sold off, and you got this big wick. It's same thing to the downside, though. Every time it looked like it wanted to lose this level or start pushing down toward that level, it got bought up. So, the dollar's been, we've been consolidating at new highs relative to previous lows, so it's never been in a position where it looked like it was losing essentially the uptrend, but it's just been very hard to read. So this is something that gives us a little bit more clarity. I think you're totally right that now that we've closed above these wicks, we could see a retest somewhere in that range before moving higher. But this is definitely in line with our thesis of thinking the dollar's going to move up. I don't think that. I do believe that this down here, this 108 level, was probably where it tagged. It's probably ended up being the low of this leg. We'll have to see. It could still lose this long origin and break down, but on the chart, there's no reason to believe that it looks like that at this point. I think that we'll probably end up seeing some continuation in the weeks to come up for the dollar, and if not, we'll probably come back down to make a higher low before moving higher. That's what I think. Let's talk about KRE. It was a pretty rough week for the regional banks. Started out fine, and then I think it was Wednesday. Something related to fundamentals came out that was pretty rough for the banks and just sent all the volatility in these banks down. We tagged the level to gain perfectly, and then just dumped from there. So that's a rejection at this point. The thing that looks nice about this is, we kind of came down to this consolidation on the way up. Again, that makes that a logical level to hold, or potential level to hold. The important thing is, and actually Price, you pointed this out before we went on here, is that this candle closed back in the range. So this is potentially what you'd start to look for if you were going to see it come back up. You'd want to see it kind of regain above this range and then come back for a retest to take that long. You don't want to take this impulse. But if we can't continue to hold up above this range, then we're going to look for potentially a retest of this level from the downside and then making new lows. So the banks are in kind of an uncertain place right now. Pretty rough week for them on big volume after Wednesday. So we'll just have to see if we can get closes above this range and try for higher, or if we're going to close below. And just for the record, this level is 48. So if we can get closes above 48, we can move higher. If we can get closes below, then we could start seeing new lows down maybe in this box area, 45-ish. What do you think?
No, I think the candle we're on right here paints it pretty well, that we're either going to hold this range of 48 to 53, or we're going to reject it here. And so that can take on a lot of it could go sideways, it could just go, it could, either way, but that's what we're going to see, is we're going to see it either hold this range between these two levels or continue down.
Cool. Yeah, not too much else to talk about with the banks. So I think that's it for now. Thanks for tuning into the Trader Hub Weekly Market Review. If you like this kind of content, sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. We'll see you next week.
Till next time.